So now I believe you guys know that I'm recording. As you can see the screen, I've started recording. So this evening we are looking at trend lines. Kindly get your notebooks, your pens or pencils so that you put you put down some points. Okay, so we are going to look at trends and lines. Trends and oh, I can hear myself. Okay, so this evening we are looking at trends and lines. So if we put them together, we are going to have trend lines. The lines are different from the trends. The lines are different from the trends. So if we say trend line, I believe most of you already know what trend lines are. Most of you know what trends are. But for the sake of this evening's class, for the sake of people who do not know anything about trend lines, I'm going to explain what a trend line is. So a trend line is a visual representation of support and resistance in any time frame. A visual representation of support and resistance in any time frame. And others would also say trend line is a straight line that connects to at least two joints or points and extend into the future to act like or to act as support or resistance. To act like or to act as support or resistance. So if we say lines, if we say a line, this is a line. Sorry. If we say line, this is a line. Either vertical or horizontal. Every line is a line. So this is a line as you can see on the screen. This is a line as you can see on the screen. But then with the explanation, I just gave, I just said that it's a visual representation of support and resistance in any time frame. So in any time frame, whether daily, monthly, weekly, H1, H4, 1 minute, 5 minutes, 10 minutes, any time frame at all, you can draw your trend lines or you can have a trend line on any time frame. So it doesn't matter the 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 time frame that you are using. On any time frame, you can get a trend line. You can just draw a line like this. But then when we look at or when we say trend line, it's not just a line. It is not just a line. So it connects at least 2 points. At least 2 points. So when we say trend line, even though trend line is a line, but then it connects at least 2 points. So let's use this as an example. So based on the explanation I just gave, if we have something like this is a trend line. Because the explanation says that um, it connects at least 2 points and extend into the future to act like support or resistance. So it depends on where you have the trend line. So based on the explanations or how we got to understand support and resistance yesterday, this would be our support. And if I draw another one here, this is supposed to be our resistance. I believe the new people on board, you are understanding the support and resistance. the new people on board, I believe you are getting to understand what a support is and then what a resistance is.
Yes, please.
Okay, that's great. That's great. So support and resistance, we know that it's the most common form of technical analysis. Every new trader starts with support and resistance. Every new trader, before they get to know about the IFCs, the demand and supplies, the Quasimodos and others, they begin to understand support and resistance. You can't skip support and resistance if you are a trader. You definitely would learn support and resistance, but maybe at certain points you may not be using it as a beginner. You may not be using it as how beginners will be using it. But then support and resistance, they do work. Support and resistance, sorry, trend lines, they do work when you are able to draw them accurately. They work very well if you are able to draw them accurately. So it's a common form of technical analysis in trading. And if you are able to draw it correctly, it's very accurate. Those of you who have been trading, I believe you can bear with me that if you are able to draw your trend lines, your support and resistance lines very well, it's very accurate. But then sometimes if you don't get it right, it means that you are going to end up losing the trade. Yeah, so that's one problem we have with people drawing the trend lines. So let's still use this as an example. Let me have another one here. Let me change the color. Okay, so we have this over here, and then you are supposed to pick trade based on this. If you're supposed to pick trade based on this, this is a downtrend. This is a downtrend. So we can also have another line here like this. If you want to have a major resistance, we can just draw this. We can just draw another line over here. So let's take this as an example. If you want to trade based on this, definitely it's in a downtrend. So I would advise you find sell opportunities rather than going for buys. Even though we know that when market hits support, it can go up. But then you first need to consider the trend. So if it's in a downtrend, it means that you need to look out for sell opportunities. Even though when it hits your support, you can still buy. So let's assume you are drawing this trend line and then you do it in a way. Yesterday I made mention that if you are drawing, you need to find you are not supposed to let your line cross the candlesticks like this. So let's assume you draw it, you draw something like this. You are very new and then you do not know what you are doing or you don't understand what you are doing, and then you come and draw something like this, and then you pick your trades here. You pick your trades here. Even though when market gets to this level, it's going to return, but then you all know that that's not the right thing. That's not the right thing. And then sometimes too, if you are even supposed to go for a sell and then you don't draw it well, you would end up going for a buy. You end up going for a buy. So let me use the previous diagram. Okay, so let's assume I draw my line like this. Maybe, okay, let me use this. Okay, so let's assume I draw the line like this. Instead of looking out for the obvious highs, maybe drawing it from this area to this area, I rather decided to use this point and then this point. So if I pick trade, if I pick a sell here, or maybe if I pick a sell here, because this is the trend line, if I pick a sell here, it means that I'm going to make a loss. it means that I'm going to make a loss. Let me just ignore this because markets, so if market just hits here, you can't make a decision based on it. But then let me still use this. So if I pick a sell here, if I draw my line like this, even though it's crossed this line and then it comes like this, let me use another one here. And then market comes up here. So if I pick a sell here, it means that I am going to make a loss. So instead of drawing the line like this, looking out for the obvious swing point, and then you mistakenly, or maybe it's not a mistake, but that's how you understand it. If that's how you understand it, it's not a mistake because you do not know whether you are right or wrong. In your mind, you know that you are right, but then when you meet other people who understand it, they'll let you know that you are wrong. I hope you guys are not getting confused. If you are confused, please let me know. If you are confused, you can type in the chat box for me to know. So let's assume we are using this diagram over here, and then instead of using the trend line or drawing the trend line on top of this swing point, you rather use, let me use a different color. No. Okay, so you rather use this as your resistance. You rather use this as your resistance. So it means that this is where you are going to pick your sell orders. This is where you are going to pick your sell orders. This is where you are going to pick your sell orders. This is where you are going to pick your sell orders. Meanwhile, you are supposed to pick them here. Here. So this is the reason why I've been saying that if you are not able to get your trend line drawn correctly, you are going to end up pick a trade in the opposite direction. If you're supposed to go for a buy, you go for a sell, and if you're supposed to go for a sell, you'd rather go for a buy. So anytime you are drawing okay, so somebody is saying he's totally confused because it's his first time. Okay, so if it's your first time, then it's normal. You need you need enough time to be able to understand these things. Yes, so that's the reason why you need to draw your trend lines accurately. This is the reason why you need to draw your trend lines accurately. So now let's look at how we can draw trend lines very well without missing. So without missing, let's put down some few points. So you need to locate at least two major tops or bottoms and connect them. Locate two major tops or bottoms to connect them. So if I talk of tops or bottoms, this is what we mean by tops or bottoms. So if you have this, so if you have this diagram, this would be the tops and then this would be the bottoms. The tops and then the bottoms. In the normal English that we use, top, up, the tops and then the bottom. So you look out for the obvious one, then you connect them. You look out for the obvious one and then you connect them. Just like the explanation says that straight line that connect to at least 2 points and extend into the future to act as support or resistance. And then the other definition also says that it's a visualization of support and resistance in any time frame. So if you are looking out for 2 points to connect them, it means that this is point 1, this is point 1, and then point 2, or you can name them as maybe point A and B. That's point A and then point B. So you look out for this one, then you connect them. You look out for them and then you connect them. So let me leave out the trend lines and then just use the candlesticks. Anytime you see me draw these lines, they are representing candlesticks. So please don't get confused. These ones represent candlesticks. So like I've been saying, you get it smooth here when I'm drawing them, but then when you visit the real markets, it's not as smooth as you see it here. So now we want to draw a support or maybe a resistance, and then we are drawing a trend line. I've been mentioning support and resistance because trend lines represent support and resistance. So we are looking out for at least 2 points to connect them. So if this is point 1, point 2, point 3, or maybe point A, point B, point C, we are looking out for at least 2 points to connect them to have a trend line. We are looking out for 2 points to connect them to have a trend line. So we can have this as our point 1 or point A, and then point B, then we connect. So we've connected these 2 points, and then we can choose to extend it. So anytime markets decide to come back maybe like this, and then it hits this trend line, because this is acting as a resistance, we expect market to at least go down unless it's being violated, unless the trend line is being violated or broken. So if we consider this as well, we can have something like this, or we can just look out for the obvious ones. We can also choose to consider we can equally choose to consider these 2 points. Then we extend. So once you get your first point and then your second point, feel free to extend it. And once you extend it, anytime market hits that particular price or level, or whenever it hits that trend line, you expect market to react. You expect it to react. So you expect it to stop and then reverse. So if market hits here, we expect it to stop here and then reverse. Guys, kindly give me a minute, just a minute. I'll be back soon.
All right.
Yeah, I'm back. So let us proceed.
All right.
So let's also note this down. Trend lines connect significant lows in an uptrend, and then it connects significant highs in a downtrend. Significant lows in an uptrend, and then significant highs in a downtrend. So this is very simple. I'll still use this diagram to explain. So we are saying that trend lines connect significant lows in an uptrend. Okay, so this is a downtrend, so I would have to add another one. Let me clear everything. So let me just use an uptrend. And then if you do not know what an uptrend is, I'm going to explain. So every time I use here, for the sake of our new people, I'll try to explain. So we are saying that trend lines connect significant lows in an uptrend. Significant lows. So I've already explained or showed you what the highs are and then what the lows are. So if trend lines are connecting significant lows in an uptrend, this is an uptrend. So if you are connecting the significant lows, these are the lows. So it means that our trend line is going to connect these ones. They are going to connect these ones, or we can choose to connect. Okay, let me use different color for this. So trend lines here connect the significant lows in an uptrend and then the significant highs in a downtrend. So if you are considering a downtrend, we can take it like that even if it doesn't look nice, but then you need to understand it. So you need to understand it. So this would be our significant highs. So let's use just these two. This would be our significant highs. And then these are the significant lows. So we are also saying that trend lines connect the significant highs in a downtrend. So this is a downtrend, and then significant lows in an uptrend. So I've mentioned downtrend, uptrend, downtrend, uptrend. Now let's look at what trends are, the type of trends that we have. The types of trends that we have. But then before we go to the types of trend, let me also explain few things. From here, we will go to the real charts, and then we will have a lot of examples for you guys to see them in the real market. We'll go to the chart to see how the real market looks like. So I've already explained this to you. It connects the significant highs in a downtrend and then significant lows in an uptrend. Creating dynamic resistance. Creating a dynamic resistance. So dynamic resistance is another term we have here. Dynamic resistance is another term we have here. And then with this dynamic resistance, it's an area or areas where markets can pull back, into without needing to be at the level or maybe a horizontal level of support or a resistance. Kindly be taking notes because I won't be able to type everything on the screen for you guys to see. So as I explained to you, you can be taking notes. Or if you won't be able to take the notes right now, I am recording this session. So right after the call, I'll just put a video on the page for you guys to download. Then you can, but then it will be better if you can take the notes now, so that if you don't understand anything right on the call, you can ask for me to explain to you. Okay, so let me take
Can you take the dynamic
yeah,
resistance again?
sure. So it is an area or areas where markets can pull back into, without needing to be at a horizontal resistance or support level. Areas where markets can pull back into without needing to be at a horizontal support or resistance level. So if I want to explain further into this, you see, anytime the market moves, you see, the markets or the level of our support and then resistances move over time. It changes over time. As time goes by, the support and then our resistance levels change over time. So time changes price of a support and then resistance level. I will still use these diagrams we have here as examples. We are going to use this same diagram. So I'm saying that time changes the level of our support and then resistance. Let me clear everything and then take it again. Okay, so I'm saying that time changes the level of support and then the level of resistance. This is a support we have here. And then if we are to draw levels, you see, if we are to mark these ones, you see, we can have, this can serve as a support. This can also serve as a support. This would equally serve as a support. And then this will also serve as a support. So I just said that time changes support levels over time. And then the explanation or the meaning is here. This was once a support, and then with time, markets moved from this area up here, and then it came down to create another support down here. And we all can see that this support, even though this is support, this is another support, but this support is higher than this. So with time, the support level has been changing. This is another support. This is another either support or support. It's still the same thing. So you see, with time, it has been changing. And if you want to consider a downtrend as well, if you want to consider a downtrend, we have our resistance here, right? And then this is a resistance level. This is another resistance over here. But we all can see that this resistance is not on the same level as this. And this is also not on the same level as this, even though they are all resistance levels. So with time or over time, or we can also say that time changes the level of support and then resistance. And this is what a dynamic resistance or support is trying to explain to us or trying to tell us. I believe we all understand this. Now let's quickly go to the types of trends that we have. For the sake of our new people, we have 3 different trends. For the sake of our new people, we have 3 different trends. This would be very, very boring if you already know these things. It will be very, very boring. I understand. If you already
Hello, boss.
yeah.
Hello? Yeah, this is Kale.
Okay.
I was just wondering that after this, let's say at the last part of the class, you could take us. Some of us are like intermediate, so maybe you could take us through some small since we've learned about what do you call it, uptrends and downtrends and support and resistance. Maybe you could teach us more about how we make an entry from those sites, if it's possible.
Okay. So this one would depend on Dr. Captain. Because yesterday I said that you guys can consult him to see whether after the assignments have been given to complete, after my assignment, if there would be another time for me to go extra, then I'll be available to teach anything I have or I know. But then I believe I'll still talk about other things right after explaining trend lines. I believe I'll talk about few other things.
Oh, okay. Thank you.
You're welcome, boss. So for the sake of our new people, Dr. Carl. Yeah, hello, I can hear you.
Yes, sir. I said we should consider the upcoming ones. We should
Hello.
not rush because actually myself. Hello. I said we should consider the upcoming ones. We should not rush because of the.
Yeah, sure. All right, thank you.
Yeah, also. Hello.
Yeah, hello. Yeah, I can hear you. Okay, let me proceed. So we have 3 different types of trends. We have the downtrend, we have an uptrend, and we also have the sideways, which is also known as ranging. Others call it consolidation. So we have these 3 types of trends, and then we are going to take them one after the other. Even though I've already
ọmọ de die ni na.
Yeah, mom did die in yeah, patch obit me a multi obia my.
Do back.
Please mute yourself. Mute yourself, please.
My head tighten.
Honorable Aaron Jackson, please mute yourself.
Okay, let's proceed. So we are starting with a downtrend. We are starting with a downtrend. So who can explain what a downtrend is for us as we are all learning? Who can explain what a downtrend is to us?
Can I come in, sir? Can I explain it?
Sure.
Okay. Per what you have taught us and what Captain Chris has taught us, I want to use an example to explain how I understand the downtrend.
Okay.
Let's say we have a television and then they are selling it in the market.
Okay.
For let's say 1,000. It used to be 50 cedis, 500 cedis, but because of a lot of people are buying, the owners of the TV started increasing the price, and then it went to let's say they started selling it for 1,000. So people stopped buying it.
Okay.
That is how I understand the downtrend. People stop buying it, so it means that those who stop buying it made they put pressure on those who were selling it. So the markets that the price started reducing because when they took it to 1,000, people stopped buying it.
Okay.
So it became stagnant, and then let's say the uptrend. Let's say it was 1,000 cedis, but later on the price changed, and then they started selling it for 500 cedis, and a lot of people rushed in to buy it. That is how let's say the market started going.
Okay, guys, let's proceed. If you have any questions, if you have any suggestions, we have the chat box for you to drop them in there. So somebody was explaining what a downtrend is, and then he was saying that.
Chris, you have not allowed me to record.
Okay, let me check.
We declare your kingdom reign. We release the plan of heaven.
Yeah, I've done it.
Okay, thanks.
Recording in progress.
Okay, so this is the sound people want to hear. Recording in progress.
Yeah, that's the sound they know.
Oh, that's nice. Okay, so guys, let's proceed. Somebody was explaining what a downtrend is, and then he was saying that let's assume a radio cost 50 Ghana cedis, and then the people were buying it, and later the sellers decided to increase it from maybe 500 cedis, 50 cedis to 100 cedis, and then people stopped buying it. And when they stopped buying it, it means that the demand went down. So that's how he understands what a downtrend is, and then the opposite is an uptrend. Do you have any other person who can also explain to us what a downtrend is?
Yes, sir.
Okay.
Yeah. To my understanding, Chief.
Okay.
Hello.
Yes,
a downtrend is when the prices are making lower lows in the market.
Okay.
And yes. So when there are more lower lows in the market, that means that the price is falling. And then when there are more higher highs in the market, it means that the price is going up, which is for the uptrend.
Okay, so if I understand you, you are saying that if there are more lower lows,
Yes, sir.
if price is forming lower lows, it means that we
Yes, sir.
are in a
Downtrend.
downtrend. So I'm drawing what you just explained. If I'm not getting it, so kindly let me know. Is that what you mean by a downtrend? If there are more
Yes, sir.
lower lows, if market is forming lower lows. Okay, that's great. And then I've already explained to you what the highs are and then what the lows are. So these ones are our lows. Anytime you draw your trend lines, the lower points are the lows. The lower points are the lows. And then the upper ones are the highs. And then Joshua also said if market is forming higher highs, if market is forming higher highs, if market is forming higher highs. Is that correct?
Yes, sir.
Okay. So he's saying that if market forms higher highs, it means that we are in an uptrend, and that's correct.
Boss, if I give me some dollars, so
Bosu. Yeah, if say dollars, beba.
okay, chief.
Okay, so Joshua is saying that if we have higher highs, if market is forming higher highs, it means that market is in an uptrend. Okay, sorry, higher highs. Okay, so higher highs and then lower lows, right? Okay, so Joshua has explained to us what he understands by uptrend and then a downtrend. I actually asked for only a downtrend, but you guys explained both uptrend and then downtrend. Who can also explain to us in his or her own words what a downtrend is?
Hello.
Hello, sir.
Hello, boss. Hello.
Hello.
Hello. Yeah, please. Thank you very much. I'm
welcome.
Ametus.
Okay.
I think with the downtrend is when the market started creating lower highs and then lower low. Whilst for the uptrend, when the market is creating higher highs and then higher lows.
Okay. So please hold on for me. You said lower. Explain the downtrend for me. The downtrend.
The downtrend when the market is creating a lower lows and then a lower highs.
Okay, so lower highs.
And then lower lows.
Okay, hold on. And then for the downtrend, sorry, for the uptrend.
For the uptrend, when the market is creating a higher highs and then higher lows.
Okay. Kindly check on the screen for me if what I'm doing is what you are trying to explain to us. Is it correct?
Please let me see there for the uptrend.
This is the uptrend. Can you see my screen?
Yes, please. I can see it.
Yeah, so the uptrend, you said when the market is forming higher highs and then higher lows.
Higher lows, exactly.
Okay, that's great. Thank you so much. One more person to explain to us in their own view what a downtrend is.
Hello. Yeah. Sir.
Yes.
Hello. Sir.
Who is
Can
speaking?
I explain?
Yes, please.
Michael. Aaron.
Okay, so I'll take Michael and then Aaron for the last two people, Michael and Aaron. So who is going first? Let's hear you. Okay, yeah, we are
Okay, sir, let me go first. Sir,
Yeah,
for me,
Mike,
I would
let's
say
go.
a downtrend.
Okay,
Hello, can I speak, Michael?
okay, you can
Okay,
speak.
okay. Market is said to be in a downtrend when sellers are in control of the market,
Okay,
and then the opposite is when that is uptrend when buyers are in control of the market.
okay. So let's assume I am new. I do not know what sellers are, what buyers are. So how do I understand that sellers are in control of the market? Okay, that's great. So that's another key point. When sellers are in control, definitely market is going to go down. Okay, so the next person, Aaron, let's hear you out.
Yeah, sir, I would say for the downtrend,
Okay.
this is when prices are moving downward within a given period of time.
Okay.
And uptrend, I will say when prices are moving upwards within a given period of time.
That's great. That's great. Okay, so guys, thank you so much. Everybody here is right. Michael said when sellers are in control, it means the market is in a downtrend. Definitely, if sellers are in control, it means the market is going to go down. And then Aaron also said that when market is moving downwards within a particular period of time, that's a downtrend. And then if market moves upwards within a particular period of time, that is an uptrend, and that's also correct. So in simple terms, just as Aaron explained to us, anytime you see market moving downwards, it means that market is in a downtrend. Anytime you see market moving downwards like this, the diagram on our left here, when market is moving downwards, and for you to know whether market is moving downwards or not, you can just use your trend lines. So we are saying that market is moving downwards in a sense that if this is a level, and then this is another level. You see, previously market was somewhere here, and then it moved down all the way to this particular level. And I've already explained to you or said to you that these lines you see here represent candlesticks. So if you see these things, let's know that we are seeing candlesticks. So if the market moves all the way up here to the downwards level here, goes up again and then come down again, even though market doesn't move in one direction, it goes up and then down. It goes up and down. But then in the general or in the bigger picture, market is moving all the way from this area all the way down here. You see, market is falling from this particular place to this place. So from this level down to this level. So it means that it's going down. It means that market is moving downwards. And anytime you see this, you should know that market is in a downtrend. Market is in a downtrend. And anytime we are in a downtrend, we expect the new low or the new lower low to be lower than the previous lower low. So let's assume this is the first lower low we had. And then if we want to confirm that market is still in a downtrend, it means that the next lower low that's supposed to form, it should be lower than the previous one. So as we can see here, this lower low, even though they are all lows, but then this low is lower than this previous low. And then this low is also lower than this. That's the reason why we call them lower lows. And we also have a lower high. Even though it's going down, this low is higher than this low. And that's the reason why we call these ones lower highs. So anytime we are in a downtrend, we expect the new low that is forming to pass or cross or form below the previous lower low or the previous low. I hope this is clear. And then let's take the other one, which is an uptrend. I'm still going to use this. So let's also consider the uptrend over here. Let's also consider uptrend over here. So with uptrend, whenever we see markets moving upwards, it means that we are having an uptrend. An uptrend is also known as what? Who can tell us?
Bullish market.
Bullish market, sir.
That's great. So it's either uptrend or bullish. It's going up, bullish. And then a downtrend is also known as bearish. So we have the bulls, and then yes, we have bulls and bears. And I heard that we also have, sorry to say, we also have pigs in the market. So there is a saying that bulls make money, bears make money, but then pigs lose money. Later on, I'll explain to you. Now we know bulls, we know bears, but then I'll explain to you the pigs we have in the market as time goes on. So this represents our downtrend. This also represents our uptrend. And then with uptrend, Emmanuel explained to us that whenever market forms higher lows and then higher highs, so we have our higher lows here and then our higher highs over here. So anytime we have markets creating higher highs and then higher lows, it means that we are in an uptrend. But in simple terms, for everybody to understand, anytime we see markets going up, it means that we have an uptrend. Now let's take or consider the last trend that we have, which is known as the sideways market. It's either the sideways or ranging market. Okay, so who can also explain to us what a sideways market is?
Hi, sir.
Okay.
Yes, sir. I'm Fawasa.
Yeah, I can hear you.
A sideways market is when the market that is creating equal highs and equal lows.
Okay, equal highs and equal lows. That's one. Any other person?
Sir. Hello, sir.
Hello.
Please, the ranging market is the market whereby the price will be moving in horizontal form by creating higher highs, and it will be moving in horizontal form by whether it's going down or it's going up, by in horizontal form, touching the support and resistance in that range.
Okay, that's great. One more person, then we move.
Hello, sir.
Yes,
Hello.
sir. Please
I think
hold on. Do we have females here? Do you have females on the call? Because it seems it's
not
only okay, that's fine. Okay, let's hear you.
Yeah, hello, boss. Thank you very much. This is
Welcome.
again. I think with the ranging market or the sideway market, I think both sellers and then buyers are equal in the market.
Okay.
Let me just put it that way.
Okay, that's great. So we've had 3 different explanations from 3 different people. Somebody said sideways is when markets creates equal highs and then equal lows. And another person also said when markets is hitting both support and resistance without a definite direction. And then another person also said that it's when buyers and then sellers have equal strength in the market. It means that nobody is able to move the market. So now let me explain all here for us. Everybody who explained it is right. You are all right. So let's use this as our candlesticks one more time. Okay, so these are the explanations all the three guys gave us. They all explain it in different ways, but then they all boil down to the same understanding. So this is a sideways market. This is a sideways or a ranging market or a consolidation market. So in a sideways market, markets will just be moving up and down without a definite direction. Market is not buying, it's not selling. So it's creating higher highs. Sorry, it's creating equal highs and equal lows, just as was it the first person or the last person who said it? Just as one of our three guys said, it creates equal highs and equal lows. And I've already explained to you what highs are and then what lows are. These are our highs, these are our lows. So it's creating equal highs, and then it's also creating equal lows. So when it happens like this, market has no direction. It's not going up, it's not going down. So this is what we mean by a sideways market. And then this is what mostly traders do. You see, we understand that when market is moving in a downtrend, you look out for sell opportunities, then you move with the market. If it's in an uptrend, you look out for buy opportunities, you move with the market. But what if it's in a sideways or when it's ranging? It means that you can just take advantage whenever it hits your support, and then anytime it hits your resistance too, you can also take advantage. So we know that when market hits here, definitely it's going to go down. So let's assume we meet the market somewhere here. We meet the market here. And then we know that it has been ranging within these areas. It's been ranging within this area. So anytime market hits our support, we expect it to go up. So anytime you see a ranging market, you can take advantage of it, and then you just buy, sell, buy, sell, buy, sell. But then anytime you are enjoying from a ranging market, you should make sure that markets, or you should also understand that markets can break out anytime. At any point in time, you should know that market can break out. But then anytime you see markets hitting a particular area or maybe hitting a particular trend, it means that definitely it's becoming weak. With time, it's becoming so. Anytime market hits support so many times, it makes it weak, and then it will simply or easily or in no time it's going to break out. But then anytime you see markets testing or moving in a particular zone so many times, touching a particular zone so many times, it should tell you that that particular zone is very strong. That's the reason why market is not able to break through it easily. And anytime market is able to break through these zones, we see with the same strength or the energy that the zone had, that same strength would move the market once it breaks out. I explained this to you yesterday. So anytime markets, when you see a very strong zone, whenever it breaks out with the same energy, with the same strength, it moves the market. Please mute yourself. Mute yourselves. Okay, so if you have any question, you can please drop them in the chat box. Okay, so somebody is saying he likes trading consolidation markets. Sorry, yeah, it's very nice. If you get it, it's very nice.
Hi, sir.
Yes, sir.
Hello, sir. I said I think there's also Chupi markets.
Hello. Yeah, you said there's also
Chupi markets, right?
Okay.
I'm so sorry, sir. I should just ask that. I think there's also Chupi markets, sir.
Okay, so can you tell us, are you asking, or maybe you are telling us that there is?
I'm asking because it seems I get it in the book.
Hello.
Please, so I've heard somewhere that the chopping market is a kind of market that is very difficult to identify the lower lows and the higher highs.
Chris, are you getting
Sir,
the question they asked?
Yes, he's asking if you have something called choppy market, right?
Yeah, choky market.
Yes.
Choky.
Can you please type in the chat box for me?
Right. Choky. Choky. Choke. Choke. See?
Choke.
Yeah, choke. Yeah.
Oh, okay, he choke.
Yeah,
Okay,
he choke.
okay.
So let me chip in this.
Okay.
Let me chip in this. I said it when I was explaining ranging market or distribution market, that in books, in 1001 books as professional tutors, those who have written books, they sometimes they have rewrite the names that will suit the book that they are bringing out, so that you will think that you have heard new method, but the actual names is what Mr. Chris is talking about. But when you become a professional, you want to also confuse and diffuse the minds of the new segment area that you tackle. Like if you finish and you find yourself in, let's say, university student, that's where you'll be doing your presentation, the rest, you want to have a name. Like if Mr. Chris, as he was talking, he mentioned, let's say, the captains ranging, or the captains, he mentioned only the captains. He says this market is called the captains. He has confused you. But the right name is ranging. So that's the market. With this, you can see higher, lower, low, because it's moving the same level, top and down. Yes. Chris, you can continue.
Okay, thank you so much.
Thank you, sir. Thank you, sir.
Okay.
Please, it's not even choky, it's choppy.
Choppy, yes. So that's why I asked them to type it in the chat box for me. Choppy, CHOPPY, right?
Yes.
Yes. Okay. All right. So you see, people come out with these things just to confuse people. Yeah. But then when we explain to you, you get to know that, oh, I didn't read the meaning dada. So if you go and buy anything that maybe you've heard my boss Captain Chris will say huhushos. So if you hear anything huhushos, the divine strategy, the Reverend
I beg, don't come and say things that they will come and arrest you.
Okay,
What is
Reverend
divine
Obafor
strategy?
Abayfonku strategy. So you go and buy it later. You come and see that Charlie Abayfonku no cry. Okay, you let me just pause here. Let's continue, guys. Let's continue. So this is a sideways market.
Yeah, Chris, let me chip in this for the new guys who are on board. One of our students that we taught we took him through mentorship, and then later on he called me and he wanted to boast of it, that as for you people, your concept, I've got a new concept. That person has written a book and has decoded it, sealed it. You can't even touch it. You can't even give it to another person. He has to give you his password before you can enter. And the guy says he's making huge sum of money in the market. I said, anyway, you should give me, let me check and see. I checked it and I started insulting him. I said, how much did you pay? Oh, I paid around $500 to $600. I said, oh, really? He said, yes. And I told him, are you not aware Prof taught you this? He said, oh, no. I said, this is breakout rate strategy. Then later I said, go to your classroom, go type it, check the video you have been taught. He went there and it was the same. He said, this guy has chopped my money. This guy. So what I'm trying to say is that in as much you're on the call, this is the pure honey lecturing that this man will give to you. Once you're able to understand this concept, I'm telling you, every book that people will bring is the same Dukadaya. I was a man will tell you, Dukadaya. It's the same thing. And you are not buying anything. So grab and make sure you squeeze the knowledge that this man is showing to you. Support and resistance at advanced level. Those who learn. Thank you very much, Chris.
Okay, thank you so much, boss.
Thank you, God.
All
No
right,
problem.
let's proceed. So I'll just add few points, then we go to the real market for us to know if you will be able to identify few supports and resistance using trend lines. So a few points for us to go.
Hello, Mr. Chris.
Yes, sir.
Please, I want to ask a question.
Okay.
Please, I want to know, in a range where the market is going up and down and all that, how do you determine the direction of the market or the next move of the market when it breaks the equal lows and the equal highs?
Okay, that's a great question. So let's check on the screen here, and I'm still going to use this diagram we have here to explain. So he wants to know how to know the next direction if should in case the ranging market is ending, right? So we have this ranging market over here, and then we are just buying and selling. Do not forget few minutes ago I said that anytime you are trading the ranging market, do not forget that anytime, any moment of time, there could be a break in structure. Market can just break out of the zone that you are enjoying. So if let's assume say market breaks out the support over here, this is the support. If market breaks out the support, and yesterday I explained to you how to confirm whether the breakout is real or a fake out. So after our candlestick has been able to cross this support here, and then the next candlestick here, I believe you already know the features. At least it should be smaller than this one, and then it should also close below this. So when it happens like this, you see, once market breaks the support, we expect it to come back and then retest. If it retests like this, we expect market to go down. So if market breaks support, we expect market to sell. If it breaks resistance, we expect market to buy. So depending on the direction markets will break out from. So if it breaks this support, we expect it to come back to retest. Then it buys. So this is how you can determine the next movement or the next move of the market. If it breaks support, you look out for a sell. If it breaks resistance, you look out for a buy. I hope that's clear.
I want to ask
Yes, sir.
Okay, so you can ask the question. I'm here.
Sir, you are saying that if market breaks support. Hello?
Yes, I'm here.
You are saying that if market breaks support, that the candlestick that broke the support, maybe the next candlestick that closed below the candlestick that broke the support, we should sell with that candlestick.
No, that's the confirmation for you. You see, you need to wait for that particular candlestick to close. And if that's
the second candlestick.
Yes, the second candlestick, not the first one. The first one that breaks through either your support or your resistance, you need to wait. Okay, so let me explain with this. So let's assume that this is a candlestick. This candlestick was able to break through the support, right? So this candlestick that broke through the support is not a confirmation for you to sell or for you to say that market has broken out. You need to wait for the next candlestick to also form and close. And if it closes below, if it's able to close below the candlestick that broke through your support or your resistance, that's a confirmation for you that there has been a breakout. Do you get it? So this won't be the confirmation. I explained this yesterday. This will not be the confirmation. But the next candlestick that follows should also close below the candlestick that passed through your support or your resistance. So this would be a confirmation for you that indeed there has been a breakout. And then if market breaks your support, you look out for a sell. So once it breaks it, most of the time we wait for market to behave anyway, but then if you get it on time, you can, once it confirms, it means it's a sell. But in most cases, market will just go down. It will just go down and then comes back to retest, and then it goes for the main sell. But then with the retest tool, you wouldn't know whether it will retest here anywhere within the zone. The retest can occur. But that's not what we are looking out for at the moment. So the question that somebody asked, that how do you know the direction if market moves out of the ranging market or the ranging zone? It depends on where market breaks out. If it breaks support, you look out for a sell. If it breaks resistance, you look out for a buy. And if I'm allowed to go further after the support and resistance, the trend lines and all that, we will be looking at the P-Nant formations and all that. Those guys, I don't know if you've already treated them, but then with those guys, some of them, when the breakout occurs, there won't be any retest. Boom, it will just move to where it wants to go. Okay, so though let me check the chat box if you have few questions. Yeah, market can break out on any time frame.
Hello, Mr. Christian.
Yes, sir.
This is Joel. I wanted to ask, when the market breaks out your support,
okay,
and has not yet been confirmed or has been confirmed with the second candlestick fully closed,
okay,
is it after then that the retest will happen, or it will happen before?
no, okay. So with a retest, you can't tell exactly when the retest would occur or where markets will actually return for the retest, but then you can't be able to know where markets should return. So once there is a breakout, let me extend this
Let me just finish this question, so maybe you could put it into one context.
Okay.
Then, because I'm asking this, because if after the market breaks your support or the candlestick breaks your support, and the second one forms fully, but you don't know if a retest will happen or not. Just maybe when a retest is happening, it might go up to an extent, possibly your equity can't hold. So you see the market will come back to sell, but you had already blown your account.
Okay.
That's why I was asking if there's any way to see how it will retest.
Okay, sure.
Or is it about making that rectangular something to see? I don't know if you get my question.
Yes, I get your question. So let me explain. We have just a minute for this session to end, and once it ends, you go back to wherever you joined us from. Then you there will be another link over there. Then you join. So let me extend this. Okay, let me delete everything and then draw it again. So we have support and resistance, right? Okay, this call would end in less than a minute. It's ending in less than a minute. Once it ends, go back to wherever you joined us from. There would be a link for you there to join. There would be a link there for you to join. Then you come back as I explain or answer the question Joel just asked. So once it ends, you just go back to where you copied it from, then you come back. Asked. Okay, please type one in the chat box if you can see my screen. Type one in the chat box if you can see my screen. And okay, you guys can hear me. After this call, I'm going to ask somebody to I'll get back to that. Someone has $10, another person would have another $10 before we go. But the task may be easy. So now let me get back to the question that Joel asked. Joel was asking, how do we know if, or how do we know where markets would return for the retest? Joel, let me know if I got your question right. How to determine where the markets will return for the retest, right?
Yes, please.
Okay. So how to know when markets or where markets would return for the retest? That's one. And then how to know where the retest will actually end? So we have two things here: where markets will return for the retest, and then where the retest will actually occur. So this is the retest. This is a breakout. Let's use this as a breakout, and then this becomes our retest. Oh, color. This becomes our retest, right? And then market goes back to its direction. So how do you know where market would return? Whether it will return here for the retest, return here, or maybe somewhere here. So how to know this? Let me take you guys back to this side. So where market... Okay.
Recording in progress.
Okay, so you see, markets moved from a particular area before it started with the consolidation or the ranging. So markets started... Yeah, hello?
Chris, continue. Yeah, sorry.
Okay. So market was here before the consolidation started, right? And then there has been a breakout over here. So how do you know where markets would return for the retest? So now in price action, we consider or we use the past, the present, and then we predict the future. So we use, with the help of the past, the present to predict the future. That's how I trade, with the past, the present, and then the future. So this is the past, this is the present, where market currently is, and then we predict what will happen in the future. So market was here, and then if you want to know where markets will return for the retest, you look out for the recent or the nearest or the first obvious swing point. And when I say swing point is where market actually returns. This could be considered as a swing point. Another point over here. This is another point over here. These are all points. Wherever market returns. So you look out for the first one before the market started ranging. So when we are looking at the first one, the obvious one, you see here there was a reaction over here when market got here. You see market was moving up. Market we can't see it. We can't see it, but let's assume say it was in an uptrend, moving up and down. So this is where we have our first swing point here, and then there is another one also here. So when market is moving, when market breaks out, you look out for the first or the immediate swing point. any immediate swing point, it means that when market gets there, the probability that market is going to react or return is very high. So you look out for the obvious ones. So you can consider this, but then obviously this is stronger than this. So you look out for the obvious ones. So if you are looking out for where market can potentially return for the retest, you consider this. So you can mark this as a level. You can mark this. So if you are picking a sell based on the retest, it means that your target should be here. Your target should be here. So this is where we expect market, the obvious or the immediate one. This is where we expect market to return for the retest. So this is one for the first one where we expect market to return for the retest. So this answers the first one. And then the second one is where the retest is going to occur or happen. So as market returns, that's the retest. But then how do we know that maybe market is coming to hit maybe this trend line? Let me expand this. How do we know that maybe market is coming to hit our trend line to return for the retest? So market is returning back. Obviously, this is where we expect market to hit and then go back. So this time when it comes, sometimes when it reaches here, because of this, there could be maybe a reaction here, but definitely it's going to cross this and then go down. Depending on how the market presents itself with the past, we can't see the previous ones. We can't see the past over here, so I'll just consider this. So this is where we expect market to return for the retest. And then where do we expect market to actually stop and then go back? So market is returning here. With the retest, it depends on it depends on this whole area. This whole zone, market can return from anywhere within this zone. Anywhere within this zone, market can return. Market can return anywhere within this zone. So for you to be able to know where market will end for the retest with that one, unless you put demand and supply into consideration. So we have 4 different types of retest. We have the touch, we have the overlap, we have the gap, and then we also have the double touch. That's not what we are considering today. So I can't go into details for that. But then this answered your question, Mr. Joel, where you can determine where markets would end for the retest or return for the retest. You consider the immediate obvious swing points, and then where markets or maybe where the retest will end. With that one, we have 4 different types of retest, which I've already mentioned. And then you also need to understand demand and supply. So this answers your question, Mr. Joel. Kindly let me know if I've answered your question well or not.
Yes, please. This answers the question perfectly. Thank you very much.
You're welcome, sir. So there's a question in the chat box from Augustine. Please, could it be possible that we fix a live trading day after this class? I mean, where we can.
We do that. Maybe it's a new person.
Okay, so Mr. Augustine, you can join the Telegram group, and then you have all those live sessions.
Augustine, are you on the Telegram page? I'm asking him whether he's on the Telegram page.
Okay, so maybe he is also trying to ask maybe if there is a particular time that we meet, maybe on Zoom, maybe on any medium to analyze the market together as we are on Zoom right now. Maybe that's what he is trying to.
Normally Sundays evening. That is what I did. We did last Sunday,
And it seems even all the setups are in huge profit. But that is not the concept. That is not our purpose here. Our purpose is to teach you the knowledge, practice it, send us your screenshots on the Telegram page for us to be able to organize you, direct you, control you. That's what we do for now. As for the live chat and the rest, you can't leave that one to myself, co-CEO Chris, and Prof. We will come out and find out when we should start that. But all these things will come out coming next year, God willing. It's going to be butu. Maybe this team the captain team will turn the dollar down and bring it small down to Ghana. Mamusru.
Okay, thank you so much, boss. Somebody is asking if
Thank you.
which time frame does the ranging so on any time frame you can get a ranging market in any time frame. In any time frame you can get a ranging market on any time frame. So now let's move from the paper market to the real market.
I have a question, sir.
Okay.
Okay, my question has to do with the breakout, the confirmation candle when the market is breaking out. We learned that the confirmation candle should be smaller than the previous candle, and then it should close below the candle that broke through the support. What if the second candle is bigger than the previous candle?
Okay, that's a great question. So, what if it's bigger than the previous candle? So, yeah, well, assembly say in amdodo and saying kwan. So, if the confirmation candle is bigger than the candle that broke through either your support or your resistance, the only thing you need to make sure it happens here is that it closes below. Once it closes below, whether it's bigger than it or smaller than it, you can still confirm. It's a confirmation once it closes below it. But we say that it should be smaller because in most cases it's smaller than it. In most cases, it's smaller than the candlestick that breaks through either the support or your resistance. But then once it closes below it, that's the main confirmation.
Very much.
Okay. So somebody
Hello,
is asking
sir.
how long.
Yeah, Chris. Let me add this before you answer. Bear in mind, guys, one thing you have to also identify when there's a breakout. The last candlestick that breaks it out comes with a speed, meaning that it comes with a full body. Most of the time, it comes with a full body, or the wicks are very small. You can go to the live chat and go and check them and see. So kindly note that. And the last thing I wanted to talk about is how to identify a breakout on a ranging market. Normally there are catches. I don't know. He will talk about it maybe tomorrow or tomorrow next. So I would pause, but I just wanted to let them know there's a speed that breaks a trend either down or up. Right. Continue.
Okay, thank you, sir. And somebody is asking
Hello,
how long. Yes, sir.
Yes, I want to ask a question pertaining to that same confirmation candle.
Okay.
You said yesterday, I remember you said that candlestick should not be a doji. Yes, in many other candlesticks. So I asked a question that then should it be a momentum candle? A momentum candle, whether bearish or bullish momentum candle.
Okay, so yes, so I said that it shouldn't be a doji or a pin bar. That's not the candle for the confirmation. The candle that breaks out, that breaks through either the support or the resistance. It should be a full candle, like a full body candle. But then it can have, yes, this candle can have maybe highs and lows, but then the candlestick should have a full body.
All right, sir.
Okay. And then
I've got
somebody
you.
is asking, any other question? Okay, let me proceed. Somebody is asking how long can he take $10 to $500, and somebody said 30 seconds.
Yeah.
That's great. So it depends
3
on your risk
5
appetite.
5 years.
Yeah, so it depends on how you treat it. Yeah, how you treat it. So if you want to take $10 to $500, it's possible, but then it depends on how you want it. Maybe you want to flip it, you want to be like growing it within a day, within 2 days. It depends on how you want it. Yeah, but then if you want to follow maybe proper risk management, it all depends on you how you want to get it. It depends on you. Yeah. Okay, so somebody is asking if we can have question and answer session. We will have question and answer session, but then if there's anything I explain you don't understand, okay, yeah, so you can put your questions down. When I'm done with everything, then we can get the questions so that we don't spend much time here. So now let's move from the paper market to the real market. Now we are moving to MetaTrader. So before I proceed, I is it yesterday I talked about step index market was somewhere here, and then I drew this zone over here, and I said it doesn't look promising. It might break through, but then let's still hold this and see. Later on, I posted the trade, the sell I picked on step index in the group. I don't know if you guys saw it, and you see it's going down massively. For you guys to suggest which pair should we look at?
VIX 25.
Okay. So now we are going to draw trend lines because we are dealing with trend lines this evening. We are going to draw a few trend lines. We are going to draw a few trend lines. Okay, we are going to draw a few trend lines. Let me see. So this is my trend line on MetaTrader. These are the only tools I use when I'm trading or when I'm analyzing the market. So we can have a trend line here like this. So let's go back to the explanation I gave on trend lines. So trend line, it's a straight line that connects to at least 2 points and extend into the future to act as support or resistance. So it connects to at least 2 points. So if I want to draw a trend line here, I would first look out for my point, the first point here, and then maybe my second point. Let me use just this. First point here, my second point here. So first point, second point, then I extend it into the future to act as support or resistance. So depending on how or depending on your area of interest, if you want to look at a bigger picture in the market, or maybe you just want to scalp a smaller picture of the market, it depends on the area that you want to cover. The area you want to cover will determine how or the points that you are going to mark. So if I want to consider just this area, maybe if I want to pick trade from just this area, I can just draw from maybe this point up to this point. Then I leave it. Or I can choose to use just these ones. And then I can equally draw from this is the first point, second point, then I just extend it. So this was my first point, my second point, then it extends into the future to act as support or resistance. So this was the first point, the second point, and then was extended into the what future to act as um, support or resistance. So as I extended it from the second point to the third point, you see, this was the first one, the second one, the third one. And when markets went up, it came down here to hit this trend line again and reacted. And then what did it do? It reacted again. It reacted again here, went up. So let's consider this the explanation I gave on when you confirm that there has been a breakout, a trend line has been broken, or maybe support or resistance has been broken. This acts as support based on the explanation I give on support. So you see, this candlestick passed through our trend line, right? It's a full candle, it passed through, and then we said that once market passes through or the candlestick passes through, I explained this yesterday and I'm doing it again for the sake of people, those who missed yesterday's class. But then I posted a video in a group, even though the video wasn't okay. But this one would be perfect. So this candlestick passed through our trend line. Look at the second one. We said that it should close below the candlestick that passed through the support. But then look at this. Market opened here and then closed here. Let me I believe this would be okay. So this is the candle I'm talking about right now. So after this candlestick closing, we said that the next candlestick to confirm the breakout should also close below the candlestick that broke through either the support or the resistance. But look at where this candlestick closed. It opened here and then so it opened here and then it closed here. So it didn't close below the previous candlestick that broke through the market. So if you see this as a breakout and then you pick a trade, you use this as a retest and then you sell here, it means that you are losing. It means that you are losing. So you need to understand every single concept. You need to wait for confirmations. Once you see it, you are not supposed to rush into the market to say, oh, Charlie, there's been a breakout, so let me just sell. But also, if you are not careful, you will end up bleeding. If you're not careful, you will end up bleeding. So this is a support. Let me just go back to what I'm doing right now. This would act as a support. This would act as a resistance. So if I want to consider a bigger picture, then it means that I'm not going to use these ones. This would be my first point, and then I'll use this as my second point. So you need at least 2 points. You extend it into the future to act as support or resistance. So if I pick this as my first swing point, and then this would be my second point, then I extend it. So this is the second point. Let me just extend it. Let me just extend it. So you see, after extending it into the future, this was the first touch, the second touch. This was supposed to touch, but I don't know what happened. Maybe it's respected this particular um, swing point. But then look at this area. When this candlestick touched the trend line, you see what it did? It reacted. So it went all the way up. So if I was supposed to maybe draw another line here, this would be the first point, and then I'll consider either this or that, depending on the picture I want, either a bigger picture or a smaller picture in the market. So if I want to use this and that, I'll just extend it or expand it into the future to act as support or resistance. So all you need is to get at least 2 points, at least 2 points. And mostly when you are drawing your trend lines, do well to ignore the wicks. Do well to ignore the wicks of the candlesticks. So if I say wicks, these are the wicks. I explained the wicks yesterday. These are the wicks. The wicks, and then these are the bodies. So you can do well to just ignore the wicks. So I have a support here and then a resistance here. So you have your first touch, your second touch, Then you expand it. Let me explain one more thing. For you to confirm that a trend line is valid, for you to confirm a valid trend line, you don't need just 2 touches or maybe just 2 points. After getting your first and then your second touches, you need a third touch to confirm a trend. You need a third touch to confirm a trend. So let's just get this. Once you get the first, the second, you need a third touch to confirm a trend. You need, so let me try using chart, the line chart. Let me try using the line chart to see if it will be perfect when we move back to, let me use this. Okay, so we are getting the same thing over here. So this is how you can actually have a trend line. You have your first touch, your second touch, then you extend it into the future to act as support or resistance. To act as support or if you don't understand anything, please type in the chat box. And then if you also don't agree with me, you can equally type in the chat box. If you don't agree with me, you can equally type in the chat box. So let's have another trend line over here. We can have another trend line over here. Let me just extend it. So I had my first touch over here, my second touch over here, depending on where you want to cover. Either you want to see a smaller picture or a bigger picture. A smaller picture or a bigger picture. So I also said that we can have trend lines on all the time frames. Currently, we are on 30 minutes time frame. Let me switch to maybe H1. Somebody should give us a different pair so that I switch from 25. In the chat box, give us a different pair.
V75.
Okay, V75.
V75, yeah.
Okay. Have you opened any trade on V75?
No, please.
Okay. Somebody is asking, do you always use the first 2 low points to draw the line then extend? So it depends on just as I said, it depends on the picture. It depends on your area of interest. Your area of interest. So when you visit the market, it depends on your area. If you want to cover a bigger picture, let me switch to V75. Okay, so we are on V75 right now. And as I said, we can draw trend lines on any time frame, on any time frame. So this is daily, right? This is daily. You can have wherever you go, you can just draw trend lines, but then just make sure you are drawing it correctly. Just make sure you are doing the right thing. So let me switch from maybe daily to give me a time frame. Just give me a time frame.
Wow.
15 minutes, please. 15.
Okay, 15 minutes.
Or weekly.
Weekly. Okay, so H4 weekly 15 minutes.
H4.
Okay, we will consider all the time frames. So somebody is asking any reason
4 hours.
Okay.
4
Somebody is asking any reason for ignoring the risks when drawing the trend lines. Ignoring the risks when drawing the trend lines. Yes, there is a reason. There is a reason why you should ignore the trend lines. Hey, sorry, not trend
The
lines.
weeks.
The
The rigs.
You are drawing a trend line, so you can't ignore a trend line. So why you should ignore the risks, you need to consider the close, where market actually the opens and then the close. So you see with the risks that we have, some candlesticks would have shorter wicks. Some of them, the wicks will be short. Some of them too, the wicks will be long. Some of them, the wicks will be short. Others too, the wicks would be long. So for you not to confuse yourself, for you to get the exact or the accurate line, you need to ignore the wicks and then consider the closes and then the opens. With the wicks, when you switch to lower time frames, they will just act as noise. It will just be like a noise. So you ignore the noise that the market is making, then you focus on the main candlestick bodies, where the candlesticks closed and then where they opened. So you have to ignore the wicks because you see this wick
That
that
sounds like a platform. I don't know.
please mute yourselves. Please mute yourselves.
For so we
Chinedu, mute yourself.
Okay, so now let me tell you guys how I mark my trend lines whenever I'm analyzing the market. Mostly I squeeze the market. You see, we have zoom out and then zoom in. This is zoom out, this is zoom in. So mostly whenever I want to draw a trend line, it's either I use the chart line, sorry, the line chart. You see, when you use the line chart and then you switch from the line chart to candlestick and then you zoom out, when you squeeze it, you see it looks like the line chart. So anytime I zoom, when you zoom and then you mark it, it would ignore the risks that you have. It mostly ignores the risks that we have. So I'm just drawing the trend lines in case I visit this market at the moment and then I want to draw um, my trend lines. This is how I'm going to. And as I said, it depends on the area, your area of interest. It depends on where you want to cover. If you want to cover a bigger picture, it means that you are going to look out for the obvious swing points. It means that you are going to look out for the obvious swing points. So if I want to look at a bigger picture, you see, I'll zoom in for you to see it well. You see, this is an uptrend over here. If you want to consider this, and then I can draw another one here. Can you guys see? You see, I can also have my trend lines here. Trend within trend. So I can actually draw another trend line here. Let me zoom in. You see, this is H4. This is H4, and then you can have this trend over here. So if I want to just focus on this, let's assume say maybe I met the market somewhere here and then I only want to trade within this area, you can just take this as your first point, the second point, then you extend it. then you extend it. So if I extend this, it means that it's going to pass through this. It's going to pass through this. So I just want to focus on this, only this area. But then if I want to look at a bigger picture, it means that if I pick this as my first point, definitely I'm not going to pick this as the second point. If I want to look at a bigger picture, if I pick this as a first point, I'm not going to pick this as as my second point. And then if I also want to look at a bigger picture, it means that I'm not going to use this. Oh, I'm not going to focus on this. I can maybe rather choose this as the first point and then use this as a second point, then I extend it. Then I extend it. So mostly if you want to look at the bigger picture, you can just zoom out to see a bigger picture of the market. Because if you zoom in, you are just seeing only this area. But then if you zoom out like this, and then you want to see the bigger picture, maybe you can draw. You see, after taking this and that, if I extend this, there was a breakout here, a retest. This retest was an overlap retest, and then it went all the way down here. It went all the way down here. So let me switch from H4 to, somebody mentioned M15, so 15 minutes. 15 minutes. Everywhere you go, just like MTN, you can just draw. So from here, we are going to look at channels. But it won't be today. We are going to look at channels. So you see the first point over here, the second here. Let me just go back. The first point, the second point, we extend it. But I said that for you to confirm a trend, you should have at least a third touch. After the first and second, you should have at least a third touch. At least you should have a, so the first touch, the second touch, then I extend it. Then I extend it. Then I extend it. So if I want to look at a bigger picture, if I want to extend my trend line to have a lot of touches, then I have to expand it, or I should extend it into the future. So the first touch here, the second touch over here, or I can choose this as my first touch and then this as my second touch, and then this becomes the third touch. So everywhere we go, we can have trend lines over here. We can have trend lines everywhere we go. Eesh. Jesus. Mr. Chris. Wonim sɛ saa me wura fi sɛ corner. Okay. Okay. Okay, so back to MetaTrader 5. So now I'm on 15 minutes, and I was saying that whenever you are drawing your trend line, it depends on the area, your area of interest, what you want to cover. That will determine where your major swing points would be. That will determine where your major swing points would be. So if I want to cover just a smaller area, it means that I can just focus on that particular area and then have my, mostly when people are scalping, you see when you are scalping, you don't need to have you don't need to do analysis on maybe a bigger time, a higher time frame, or maybe a bigger time frame. You just need a smaller time frame, maybe 5 minutes, 15 minutes, 1 minute to scalp. Then you just go your way. But then if you want to look at the bigger picture, it means that you're going to switch from a lower time frame to a higher time frame. So right now we are on, I've already marked few supports and resistance on H4. So currently we are on M15, which is 15 minutes. So here, if I want to draw is a line, maybe a resistance or maybe a trend line here, we already know that we should have at least first and then second points, then we extend it. First and second points, then we extend it. So here we are looking at lines, but then we can't always use lines when we want to draw support or resistance. I explained to you that support and resistance are not just lines. We can have zones. We can have zones in them, but then right now we are only looking at trend lines. So you look out for your first and then your second point, you extend it into the future to have either a support or a resistance. Please give me few seconds. Hello? Yeah. Can you please I've connected my currently I'm hosting a Zoom meeting. I'm teaching people on Zoom and I've connected. So you let me finish and then I'll finish very soon. Yeah, yeah, sorry about that. Yeah. Hello guys, I'm sorry I'm back. Yeah, somebody I had a call on my phone, so the network was messing up. So here, if I want to draw my line or my train line, I can just look out for the obvious ones. So this could be the first point, and then I consider this as my second point, depending on where I want to cover. If I want to cover this whole area, if I want to cover maybe this whole area, this whole area, if I want to cover this whole area, it means that this would be my first point, and then I look out for another point over here. I don't have to I don't have to draw the line down here because I want to cover this whole area. If I bring the line down here, it means that I won't be able to cover this whole area. So I'll just look out for the next swing point, and then maybe I can consider this. I can consider this, or I can consider the next one over here, and that would help me cover the whole area that I want to cover. But then in other case, if I also want to focus on only this side, it means that I don't have to look out for this swing point and then extend my trend line over here. If I want to cover only this area, it means that I can pick this as the first one, then use this as the next obvious swing point here, then I extend it like this. If you are confused, if you don't understand anything, we have the chat box. You can please drop your question. If you don't understand anything, kindly let me know so that I can take it again. I believe you guys understand what I just explained. So you drawing your trend line depends on the area you want to cover. Then you just look out for the highs and then the lows. You just look out for the highs and the lows. You look out for the highs and the lows. Okay, there's nothing in the chat box yet. Somebody is saying he doesn't understand this trend line. Oh, so
Hello, Chris.
yeah, hello.
Please, I have a question.
Okay.
I want to ask that if you are drawing the trend line on the 15 minutes,
Okay.
is it advisable to switch to a time frame higher than the 15 to know maybe the overall trend or something before you enter the market?
Yeah, sure. So anytime you want to pick a trade, you don't focus on just one time frame. You don't focus on one time frame. You start from the higher time frames, then you switch to the lower time frames. Unless you are just scalping. Please mute yourselves. Mute yourselves, please. Unless you are just scalping. If you are scalping, it means that you just need lower time frames. And if you are scalping, you don't stay in trades for a longer period. So if you are scalping, fine, then you can just maybe 15 minutes, 5 minutes, 1 minute, you scalp, you go. But if you are doing day trading, if you are swinging, you don't just look out for maybe 15 minutes to do or to maybe analyze the market. If after drawing, maybe after having your trend lines on maybe 15 minutes, and then you want to make decision on the 15 minutes, you want to trade on 15 minutes, you can equally straight down to the 5 minutes or maybe 1 minute. But then for you to be on the safer side, first look at the higher time frames to know the general trend, to know the trend of the market, whether the market is in a downtrend or it's in an uptrend before you make the decision. So you don't focus on just one time frame to pick a trade. If you do that, you are doing something wrong. I believe your question has been answered. If not, kindly let me know.
Yes, please. Thank you very much.
You're welcome. The name, is it Helda, Jane, or who? Are you there? Because I'll be asking them questions. All the ladies on the call, I'll be asking you questions. Any other question, please?
Yes.
Okay.
Please, I want to know that if after drawing your trend line on the market and the maybe you use one the first and the second point to draw the trend line, and then after the market goes and then comes back to touch your trend line, is there any other confirmation to, or once it hits the trend line or touches the trend line, you should immediately enter
Yes, you
the
see,
market?
picking trades, when we are entering a trade, we need few confirmations. So if you are trading solely on trend lines, then once it touches the trend line, you go in, you don't wait for anything because you are trading based on trend line or maybe support and resistance. So this is a trend line over here, right? This is support and then this is resistance. And I know that whenever market touches this resistance, it sells. So this is where market started from. It touched the trend line, it came down, touched the support, and then it went up to touch the resistance, came down again. So you see, it has been moving within the support and then the resistance. This is a channel. Tomorrow, God willing, I'm going to explain into details, channels and other things. So if you are trading solely based on this, it means that whenever market touches it, you buy. When it touches the the support, you buy. When it touches the resistance, you sell. But you see, on this one, it's in a downtrend. So you look out for opportunities that favors the trend. So you look out for sales. So anytime it touches the resistance, you sell. Anytime it touches the resistance, you sell. And when it touches the support, it means that the sell has ended. Then you can wait for it to go up, then you sell again, or you can buy on the support. you can be doing it until there has been a breakout, until there is a breakout. And we already know what a breakout is. We already know what a breakout is, right? So now let's consider this. We have a very good example here. You see, market was moving within the support and resistance, and then this candle, we all see this candlestick over here. This was the candlestick that passed or broke through the resistance line. And we were saying that the candlestick that breaks through the resistance should be a full body candle. So you see this candlestick was very strong, right? And then it broke through the resistance line. And then the confirmation is that the next candle that forms should be smaller, or it can also be bigger, but then in most cases it's smaller than the candlestick that passes through the line, and then it should close either below or above. If it supports, then it should close below, because we know support is down. If it supports, it should close below, but if it's resistance, then it should close above, because we are looking out for a buy. Now let me leave this and then come to this candlestick here. You see this candlestick, it also passed through the trend line, right? It closed below the trend line. But then let's look at the next candlestick that was formed. This was supposed to close below this candlestick if the breakout was real. But look at what it did. It didn't close below. It was even a bullish candle, and then it went back. But look at this candle that was the real breakout. It passed through the resistance, and then the next candle that formed closed above the previous candle that broke through the resistance line. You get it? And then there is another confirmation. You see, Joel asked a question. He asked the question how to know where um, the markets will return for the retest. So this whole area, this is where the retest happened, right? Let me okay, this is perfect. So this was where is the breakout? This was the breakout, and then it went all the way up here and then came down to retest on the trend line. So this retest, who can tell me what this retest is? I made mention of 4 different types of retest, even though I didn't explain, but then who can tell me what this retest here is? Anybody?
Is a pin bar.
I'm not asking about the candlestick. Oh. I made mention of 4 different types of retest: the touch, the gap, the overlap, and then the double touch. Who can tell us?
It is the touch.
It is the double touch.
Okay, somebody is saying it's the touch. Okay, so those saying double touch, can you please explain to me why you are saying it's a double touch?
This is a touch retest.
Okay, touch retest.
Because there are two candlesticks that are rejected from the resistance level that was broken.
There were
two candlesticks. There were two candlesticks that are rejected there. They formed a pin bar.
Okay, this is a double touch.
Let me see to 5 minutes. I'm not getting you clear. Now I can't find it. Oh. let me look for it. Hey, Charlie, you know. Okay, this is it, right? Okay, so now let me use this opportunity to explain to you. Whenever you have, maybe you analyze your market on a lower time frame and then you want to switch to a higher time frame and then come back, always make sure you mark that particular area so that you don't miss it. You see, now after switching from 15 minutes to 5 minutes, I wasn't able to find it unless I switch. So you can just have this vertical line, and then you just put it there like this. So even if you switch to the lower time frame and then you can't find it, you can just be scrolling, and wherever you see that red or maybe the vertical line, you should know, say, that's the area you marked. So now I'm going, once the vertical line pops up, it means that I've seen the missing setup. Okay, I'm here. Wow. Oh, or because it's red, let me just go back and then change the color. Black Mamba. So guys, okay, it's here. If you have questions, you can just drop it in the chat box. Now, no, I'm not sure this is what.
Yes, please. This is not the one that we were talking about.
Because so it means that that's not where I marked, right? Okay,
Yes,
this is
please.
it. This is it,
No,
right?
where you, yes, yes.
This one,
This
right?
one.
Okay, okay.
Yes.
All right. Okay, we have it here. And then somebody was explaining to us why it's excuse me, a double touch. So the person can
Double
please come
touch.
on board again. Hello. Yeah, I can hear you. You were explaining to us why you said it's a double touch. So kindly explain to us. Oh, are you there?
So I was saying that there was a two rejection candlestick which formed a pin bar. That
Right.
made it a double touch.
Are you talking about where the breakout occurred?
The retest on the trend line that was broken.
This one, right?
Yes, yes, yes.
Okay.
Yes, sir. Yes, sir.
Okay, okay. Any other person?
Hello, please. I think it's a single touch because if it were a double touch, in my notion, I thought the market could move a little up and then come to the trend line again. But this time it touched the once and then it used two candlestick, but it was once. That's what how I seen it.
Okay, okay. Thank you. Any other?
Okay, me too. I think it's a single touch because I think if it was a double touch, it will form like double bottom there. to form the double touch. So I think since it's just one distance, I think it's a single touch.
Okay, one more person, then we move. Or we should just continue.
Yeah, hello, sir.
Yes, sir.
Yeah, I think it's a double touch, sir. Because where there was the candlestick that broke the trend line,
Here.
the market, yes, the market came back for a retest, short retest there, then went up a little bit, then came back for the real retest again before rallying to the upside.
Yeah, that's great. Cause so here you'll be able to get it clearly when maybe you switch from 15 minutes to a time frame that's lower than 15 minutes, right? So the breakout occurred here. It came back to touch the trend line, and then it went all the way up, came back again to touch it, right? So we had a touch here and then another touch here. Let me switch to 1 minute and see. Okay, so this one also came and then it came again. So the touches were 2.
Yes.
Yes, okay. All right, the touches were 2. Okay, so somebody is asking, Bernice is asking where she can get the old videos. Kindly that's my number. You can text me, I'll give you, or maybe you can contact Dr. Captain Chris to give you the Telegram group link for you to join. If you're already on the group, sorry, if you're already in the group, then you can just go to either Files Media to get all the materials. Okay, so give me another one last pair and then a time frame. Then I leave the remaining time for.
100.
Hello.
VIX 100. Let's analyze that.
Okay. And then the time frame.
Okay, let's use 15 minutes time frame.
15 minutes. Okay. So here, if you want to draw trend line, we can have our first touch over here. And then I am drawing for us to extend to see if maybe the trend lines do work. If maybe the trend lines, we've already had confirmations that they work, but then they don't work all the time. You don't get them accurately all the time, no matter how you draw it. So it depends on where you want to cover, and then it also depends on where the market is currently. So now, if I want to draw my trend line, if I want to draw a trend line, obviously this would be the first point. And then because of what happened here, I can just ignore this and then use this as the second point for me to be able to have another touch over here. Or if you want to consider this too, you can just leave it like this. But then you can also consider this for you to have another touch over here. Then you extend it. You either extend or expand. So anytime market comes back to hit on this, so when market decides to come back to hit this trend line, depending on where market is right now, and then depending on the movement of the market, maybe we could say that market is going to touch this trend line around this um, maybe here. And then we can equally, if you want to, if I want to analyze this, maybe I would have something like this. So I can have something like this if I want to analyze this to maybe pick a buy on for 100 right now. This is what I would do. And then I also have my trend line here. So I would just combine this trend line and this zone I have over here to predict that, okay, should in case market, because the trend line is here, if market hits the trend line, to um it's likely to go back. And then I have the trend line and also have this zone over here that, okay, so because this happened, it's likely that when the market enters this zone, it will return. So here I would have two different confirmations. I have the trend line over here, and then I also have this support zone over here. And this is where market is right now. Somebody would also say that, okay, let me just focus on this and then scalp. So somebody can also draw this. If you draw this, you are not wrong. You are never wrong. But because you see, we have a lot of risks here, they are the same or almost the same. So if you are using trend lines for something like this, it's a bit difficult. That's why sometimes you don't only need to focus on the lines, the trend lines. You can just use the rectangle to have it like this. So anytime market enters it, you know that it's possible for market to return. It's possible for market to return, but for the sake of this evening session, we are only focusing on trend lines. We are only focusing on trend lines. So this is it. Let me switch to, you see, when you switch to 5 minutes, we also have this.
I feel that we should cater for the end and
I
the
can't
close
hear you
of the
clearly.
candle. Are we going to cater for the weeks too?
Hello.
You were saying that, sir, I'm hearing you. You were saying that we should cater for the open and the close of the candlestick, not the week. Or are we going to cater for the week too?
No, okay, so mostly you're not supposed to focus on the risks. You need to focus on the closes or the opens. So these ones here, you focus on the opens and then the closes. So these ones will just be noise in the market, because if you draw it like this, right? If you draw it like this, but then it's not always that you need to ignore the risks. You see, we have a lot of risks here, and most of them, when you consider this first week, and then the second point, you see, when you extend this week, you see this week was able to cross the line, but then the fourth one also came to hit on the same level, and then it returned. It came to hit on the same level. So where we have a lot of risks, and then you don't want to be confused, you can just ignore the risks, and then you focus on the closes and then the opens. Is your question answered?
Yes, sir.
Okay. All right. Please, if you have any other question, you can please drop them in the chat box, and then I'll invite Dr. Captain Chris to also come on board to take over. If you have questions, you can drop them in the chat box. When he's done, I would come back, and then we even have just 5 minutes left. So, Dr. Captain Chris, if you are here.
Great, guys. Kindly type T as thank you for our class tutor. T as thank you. Type T.